In this chapter I want to cover a system which you've almost certainly come across before, which is the cup and handle. It's a bit similar to a system that I described in an earlier chapter, which is one of my own systems. Let me just kick in and show you what it is. Essentially, actually, before I show you an actual price, let me show you the theorized version. You've got the sell-off, you've got the consolidation, you've got the rally, and then you've got the pullback before you get a move onwards. You can see with a pullback like this, you could put a stop loss there, an entry level up there, and then set a target. That's the cup and handle. Why? Well, this is the cup, that's the handle. Short and stout. Going backwards into something like this, of course, it never really looks like the theorized version. We've got a move, you've got the handle, which is the pullback after the rally, so you've got the consolidation, you got the rally, you got the pullback. We missed all of that, remember, we're not looking to get those. And then you've got the entry, which is, post that is the entry level, and that's the stop loss down there. And as you can see, you get a nice little move there. Now, whether you're an Elliott waver who looks at 1A, 2B, pullback C, and then a 3 up there, or whatever, and don't worry if you're not, I'm not an Elliott waver, but the idea that it takes the market a bit of time to get into something, so you get a bit of a fall off, you get a small rally, a bit of a sell off, and then this is the point, the third one, which is the most lucrative. That's when the buyers come in with big money. That's when the people who missed the early trades get in. It's when the profit takers have gone out of the way, so all you're left is one-way traffic, which is money, money, money to buy, buy, buy. Because as I say, the sells have gone out, the laggards have come in. So you've got several things which are necessary for a trend, which is get rid of the weak sellers, get the laggards on board, get the money pushed into it. Whereas this rally is too early. You've got the people who are looking to sell, just waiting for this. That's why the rally is short-lived. You've got the early movers only, so the late money, the slow money isn't in yet on that one, and that's why it's short-lived, and that's why the third rally, in theory, is supposed to be the most lucrative. That's the cup and handle. The reason I mention it is because it does happen a lot, and it's relatively straightforward, and it's a system which can work for you time and time again. Again, it's one of those where we can show lots of examples, and what I'll do is in the monthly updates that we have is actually show more and more of the examples. But it's worth adding into your arsenal amongst the systems, because of course you might not get signals on all the different types of systems in the different types of markets you're looking at, and that's why it's useful very often to have some of these where we can maybe not get a hit on one of the other types of systems, but you get it instead on something like this, which, as I mentioned, may well give you a signal instead. So you're not left just twiddling your thumbs for the whole week, and it's part of the idea generation.